Good early morning, guys, girls, everybody, as we go into New Year's. All right, I'm doing something on KLIP from KRANE shares. And then while I was at it, right, KLIP is an income fund, and I'll go through all the details here. I had done a little research and I bought some KBA and some KWEB from KRANE, which are non-monthly income yielders. They do pay a dividend at the end of the year. So I just got a dividend on those guys on the 17th of December. So it makes sense to just say, hey, how did these things do? Because they're all China focused, right? So KRANE Shares does a lot of things, but they're pretty strong in the China market. And I'll differentiate these three funds other than, let's start with KLIP. So I went back. KLIP's been around since way back in 2023, but I used an annual. It's easy when you just take an annual basis, right? When you go out and you assume the price on 12/28, 2023, and then you got the first distribution here, a 126 declaration, ex dividend. You were real close to maybe getting another dividend there, but the way I did it was I wanted everything to be about a year of ownership. Um, so here are the dividends. So we just declared on Friday 27th, right? 22 cents, 22.32.15, which if you look is one of the much smaller payouts. Now, a couple of things related to China, and I'm going to differentiate, but let me go through the results before I do that. So looking at the top row, KLIP only. So 1 year ago, 12/28/2023, the price was $16.05. Current price at declaration date on 12/27 was 11/16. So I use my $1,000 gauge, and I only use it to show you whether you lost or gained in dollars, and the rest is all about total return, not necessarily based on that $1,000, but you could apply it. So what happened? Well, if you look, that's a $4.89. All of these numbers down here relate to KLIP. Okay, so it declined. You can see it was 1605. Then when they declared and paid, they declared this, it was already trading at 1547. So down 58 cents, right? Down 20, down 17, down 2 cents, 56, 81. There was a month where it went up 50 cents, then it was down 53 cents, down $1.10, and up 6 cents on the last declaration, giving you a total of $5.85, which on an annual yield basis, using the inception price, you're looking at a 36.42 yield. This is a true annualized yield, right? Now, what's interesting is it's easy sometimes you say, okay, again, I know that people come in and buy this mid-year or whenever you buy it, but I've got to use some starting number, right? And so I used the 12/28/2023. Now, again, it was trading, the KLIP was trading way back, right? I think KBA and KWEB had maybe a few extra months, but I used everybody's price at 12/28 and then 12/27 here in the current price. So let's go through KLIP and say, okay, you had a 30% gain loss, right? That's real. In 1 year, you declined 30%. Okay. What did you make in dividend? Well, you made $5.85, so you made 36%. These don't even have to get annualized because it is already based on an annual. So you can see it here. If I make 585, it's a little bit more than the 489 I gave up in book value, right? Again, some people say, well, I'm interested in the income. Well, at some point you have to sell, right? So you get a 5.95% total return, although you're getting 60 cents, 37 cents, 41 cents, 48 cents, and so forth. So you see what a total return does because of this 30% decline. Well, let's take a look at the other two. I bought KBA and KWEB earlier in the year. I didn't buy them back on 12/28, but I probably owned them for 6, 7 months. So I wanted to look at them. Now, what are the difference in these? First off, KLIP doesn't give you the holdings. I'm going to go over to my holdings page in a second. So let's go over and do that, and then I'll come back and compare these for you. So here's KBA's holdings. They're all internet focused, right? So they own Contemporary, Ampermex, Kuichao, Mutai, Zigen. I know this one from the days of mining. This is a very profitable and very large mining group company inside China, right? There's a Chem, Foxconn, Industry. Oh, okay. So anybody who doesn't know what Foxconn is, if you own an iPhone or Apple products, Foxconn for years has been a big industrial company that did all the assembly. Remember, for Apple, the engineering work is done in Silicon Valley. Right? They come up, they write the software, they design the specs. They then ask Foxconn in China to source and assemble a lot of the stuff. Now, Apple may write, we want this processor, this resistor, but Foxconn does all the logistics, and they're cheap, right? China cheap. So they've been building the iPhone over there. That's why there was a lot of iPhone knockoffs in China, but you don't see that in much else of the world. But that's Foxconn, a very large, successful company. But look at this, 6%, 6%, Chem, Hygon, I didn't look them up. BYD, the largest electric car company in the world. Some say Tesla, but in the rest of the world, BYD owns it. You go to Thailand, Singapore, I've been all over Asia. BYD is significant. Obviously, in China, they're the largest, but they do very well in the Asian region. I think Trump has some things he's trying to fix because if BYD had its way, it would go down to Mexico, build a bunch of that stuff, and then sell it cheap into the US. And Trump doesn't want that. I'm in agreement with that. Not necessarily on tariffs in all instances, but there are some instances. I mean, all of our car manufacturers, electronic companies, everybody has a hard time in China. China makes it very difficult for foreign companies in general. I'm not talking cars now, I'm talking technology. CMB, Luxshare Precision, a big power company, very large power company here in China. So you see, it's a diverse set. And a further delineation here, these are asset companies that are on Shanghai and Shenzhen and a little bit in Hong Kong. KWEB, its holdings are typically, by definition, they want assets that are listed outside mainland China. Now, that doesn't mean there's not a listing inside China, but their main company listing is outside mainland China. When I say China, I mean mainland China, right? So Hong Kong would be an example of not mainland. I mean, China may argue that it's mainland, but we all know it's not. It may be somewhat under influence of China. All right, so KWEB's holdings, you guys will recognize these. Both of these are considered internet, but you can see that this truly is internet. Tencent, Alibaba, JD.com, right? PDD, Trip.com. I don't know, Full Truck Alliance, QFew Technology, and Kuishu. So some large percentage in Tencent and Meituan. Then you guys can look up, obviously, Alibaba or Baba. You see it in Yomax. You see it in other ones. JD.com is huge. PDD Holdings is huge. A lot of these Chinese billionaires. Trip.com used them. Agoda, Trip. There's several. Okay, so slightly different, right? This one is designated internal mainland China listed companies. This is a little more internet. Even though this shows internet, this is really about the internet for the most part. And so in KLIP, they don't give you, from what I saw, I get this consumer cyclical communication service. I sort of get breakdowns by sectors. Probably could dig and dig to find further KLIP holding. But why do I even care? Well, I think we care because we're trying to see a different performance. All you have to do is go out on YouTube. I consume a lot of just reading, studying, China, especially in Shenzhen and the southern, but it's true in Beijing, they're really going through. The reason I bought KBA and KWEB, they've done okay for me, right? They're up a little bit from where I bought. I got a nice dividend. I've written some calls, but they're very undervalued from traditional PEs of Chinese companies. So China's hurting now, but I see them recovering and getting better. And I see, international, I see Chinese investment. Again, you can take off your USA or UK or wherever you're from. Look, I don't love China. There's a lot of things that China's doing to the US and other countries that I don't like, but I also see them as the 10,000 pound gorilla that they are, the up and coming giant, not in the world for that matter. Um, and so there's a lot, and you can't ignore investment and some of that. And when I see something cheap, I want to own it. So let's go back. And I only brought it up if you were playing KLIP. And again, I know some of you are going to say, well, Bruce, but I bought in June of 2023 or I bought on this time. I get it, guys. Look, we're right at a dividend payout, so we got a year. So how did you do? You got a 6% return. That's not great for 12 months. Well, how did I do with KBA? Well, I got a 15.3% return, right? You would have bought it at 20.66 and is currently at 23.82. Okay, look at the dividends. They're nothing to compare. These guys pay monthly, right? Every month you get a dividend. I mean, this one's terrible, but every month you get one. And then here you get it once a year. So KWEB pays twice, but it is a higher price asset, right? It was 2664 and KBA was 2066. These are a little bit, but where I see the downfall in China, I think it's hit KWEB a little more. So I think maybe next year KWEB has a chance to significantly go up. But for KLIP, I did want to point out that that's not a good return for having a monthly. It's a classic case of saying, "Oh, I'm chasing yield," right? Now, again, when you bought, all of that stuff, maybe at $10 or $11, this is attractive. And it may well be, China needs to pull itself out of the rut that it's in. And that could be 6 months or 12 months or something. I don't study the market that much, but I see some serious impact, especially in the southern half of China and in the north in Beijing, which is the capital and one of the largest cities, probably the largest city. I've been in Shenzhen in the south, I've been in Beijing in the north, and I've been in Shanghai, which is a wonderful city, right? A wonderful city. So dividend returns, let's go through. So 36.42. Okay, that's why I go and chase a dividend income, right? All of these things, 585 on a $16 asset, on an $11 asset, if it could pay that much, but it probably won't. This was a more expensive. And then look here, you get a 15% gain just in stock value from 20.66 to 23.82. But your dividend, just 151-cent payments, $2.47. Nothing to sneeze at, but it's nothing great, right? So what did we get with KWEB? Well, it paid a little more. It costs a little more. It paid $1.03, twice what this guy did, and less than 20% of KLIP. But look here. So I got a 15% gain or loss, and I got 11.5 gain or loss. So who wins over here? Well, total return says KBA wins. And I know on my KBA position, I've written calls. So I've collected a couple of income. And that's what KLIP's all about, right? It's a covered call strategy. Well, you got a covered call strategy and you're making under 6% in total return. That's terrible. Again, analyze the market, figure out when the DCA, when's it low, what's the likelihood. I do think China will recover, but it could be 6 months out in time, a year. So that's what I got for you. I thought I would, rather than just do the boring part of analyzing KLIP, I thought I would throw some other stuff. These are all KRANE shares ETFs. Okay, guys, have a great New Year's. I'll probably have one more video this weekend. But anyway, enjoy. Hope you enjoyed this. Let me know in the comments. Again, Bruce with Targeted Wealth Creation. I'm not an investment advisor. This is not investment advice. Have a great one. Bye for now.